Welcome back to Brazil Crypto Report. Today I'm joined by Thiago Barbosa Vanderlei, who is an expert on crypto taxation in Brazil at Salles Nogueira Advogados. In this conversation, we dive into new rules impacting the taxation of crypto assets held offshore, and also why these rules have generated more questions than answers. All right. So today I'm joined by Thiago Barbosa of Salles Nogueira Advogados, who's an attorney specializing in crypto taxation in Brazil. We're going to be discussing today some significant updates to Brazil's crypto taxation regime. So Thiago, it's great to have you on the show.
It's a pleasure. Thank you for having me, Aaron.
Amazing. Well, to get started, why don't you just tell us a bit about your professional background and what you focus on currently?
Well, first of all, thank you very much for having me. You're making a very good job with Brazilian Crypto Report. It's one of the newsletter that I actually read to get informed about what's going on. So I'm very happy to be here.
Appreciate that.
From my background, back on 2018, I was at my office and I received a bunch of guys that were talking about dealing with crypto assets. And by then, I didn't know anything. I was working just on traditional taxation here in Brazil. I worked with this since 2008. And then here I am at the office, and this bunch of guys are telling me that making large money, large amount of money with crypto assets, and they are starting to get worried about the taxation. And I've never saw the real operation. I brought them to the conference room, and they just opened the laptop and show me how easy it was to buy a Bitcoin in one exchange, and after 10 seconds, sell with a profit in another exchange. I was really excited about that operation and start thinking about which are the taxation aspects of this thing. And I start to work on this. I got them as a client and will start my studying of crypto assets. That was my red pill moment. And from 2018 till now, I'm fully dedicated to work not only with regular taxation, but with crypto taxation. By then, I was deciding also which would be my theme of my PhD at University of São Paulo, that USP, and I choose to analyze the nature of crypto assets for taxation, which without the jurisdiction vocabulary, it's what the hell is a crypto asset for tax authorities? Because we're talking about foreign exchanges and local operation, foreign operation, but nobody really have the elements to define what is a crypto asset. So I decided to start this journey, and I'm ending it now. I'm working pretty much on the shadows because I'm writing my PhD that should be delivered this June of 2024. So I'm the deadline running here. And I'm also working with the large market since 2020, because when I went to another office, we started to advise Mercado Bitcoin by the time. So from 2020 to 2023, I had a chance, I was privileged to check out the tax implication of each and every token that was launched on that platform. So it gave me a very large background in practical issues, because when we are just studying the crypto aspects and legal, we just see part of the thing, and we get in touch with the real protocol, the real issues. We learn a lot. So I have the privilege to assess Mercado Bitcoin from 2020 to 2023 as a service provider at my law firm. So it was a pretty good school. And here I am Now I have many clients in crypto scenarios. Both of them are business, both of them are person. So I'm a lawyer, but with a large foot outside the law. Not outside
Amazing.
the law that it's not in a criminal way. It's outside the law because in the business way, you have to think and understand the business and not only the law aspect.
Yeah, right. Yeah, the two are very intertwined, probably perhaps more than ever in the world of crypto, right? Because your crypto business is not going to be viable if you're incurring, massive unknown tax burdens of some sort that you didn't realize you were incurring or something. No, that's super interesting, and really appreciate you taking time. It sounds like you're a busy guy. You've got a lot on your plate right now, so I really appreciate you taking time to chat with us about some of these rule changes. And so before we really dive into some of the details, I was hoping you could maybe just give us kind of an overview of what the Receita Federal published the last. I guess there's two things that they published. First, they kind of made like an announcement of an announcement, basically 2 weeks ago. Then this past week, they published a new normative instruction, which I think is just a fancy name for like a rule of
Yes.
governing taxation treatment of particularly with regard to treatment of offshore crypto assets. So crypto assets that are being used on or being bought, sold, custodied on exchanges that are not registered in Brazil. So hoping you can kind of give us like an overview of what is going on here, and then we can go through some of the details and some of the more specific points.
I was joking with you before we get on air that explaining Brazilian tax scenario, it's a very difficult thing. And coming together to explain taxation in crypto, it's a different level, but I'll try my best to make it as easier as it comes. In the regular scenario that was rolling till the end of last year, 2023, we had no differentiation between the gains derived from alienation of crypto assets. What I mean about that, when you make a sell of your crypto assets, whether it's based on operation in Brazil or in a foreign exchange, the tax rate was the same. It was 15% for gains up to 5 million. And from that place on, we have an increasingly tax rate that is 17.5, 20%, and 22.5%. But basically, most of the guys, 90% of people get issued by the 15 rate, okay? And you have an exemption limit of 35,000 reais. If you deal to 35,000, every gain you had would be exempt. You would not pay anything on IRS taxes.
And that's per month. That's per month, right?
Yes,
35,000 reais per month.
It's a good thing to remember that it's 35,000 reais per month, and it's not 35,000 gains. It's when you sell to 35,000. If you sell up to 35,000, any gain you had was not taxed. But if you sell, it's not gain. If you sell 36,000 reais, every dime you gain should be taxes, and not only what surpassed the 35. Okay, that's a very common mistake in Brazil, that people think that it's the gain to 35,000 that is exempt, and it's not correct at all. Okay, so that's the first step, and this rule it takes all the operations inside Brazil and outside in international exchanges. But nowadays we have a different rule. By the end of the last year, 2023, the government passed the law 14754, and it make a differentiation between the capital gains you have and the dividends you have in Brazil and the dividends and capital gains you have abroad. So the first thing that make many things, many of the members of community is questioning what is abroad for the crypto world, because we are all on blockchain. So where is this blockchain? Where is my crypto? And I had multiple questions here at the offices asking, Thiago, if I had a hard wallet that is in my apartment at California, my crypto assets are abroad. Should I tax them by the new rule or by the old rule? Well, let's see. The new rule says that the inside operation would be taxed as always. Every month you surpass the limit of sales of 35,000 reais, you should check which are your gains and you pay 15% of these gains as IR, imposto de renda, as we call in Brazil, the revenue taxes. If you now in 2024 make the same operation with a crypto asset that is outside Brazil, and we'll say what it is outside Brazil, you will not have this limit of 35,000 reais anymore, because for those kinds of operations, they don't have a limit of exemption. So this is the first major change that the new rule applies for the foreign application and for the crypto that are exchanged abroad. So you don't have the limit of 35,000 reais. On the other hand, what government gave to the investors was two main things. The first one.
Sorry, can we just pause? I just want to make sure we're understanding the first part you mentioned, because I think that's quite important. So basically, previously it wouldn't have mattered if I'm a Brazilian tax resident, but I have a hardware wallet in California, and I sell, say I put a bunch of money into some meme coins, 100 reais worth of Solana meme coin X, and it doubles overnight. Then I sell it. Like now I would have to pay, even if it's just like 100 reais worth of capital gains on a 200 reais sale, I would have to pay the 15% on that 100 real transaction, basically. Whereas before, since that's under the limit, I wouldn't have to worry about that. That's exactly what you're saying. Okay.
Yes, but I will complement one thing about your line. That is, a major change in this new rule is that you don't have to pay for each operation. What I'm saying is that you are able to offset your losses during the year. So it's a great and major change, because you have to control your operation during the year to check out at the end of the year if you had gains or if you have losses. So it's a different thing. It's a different game, because nowadays, if you are exchanging in Brazilian territory, and we will talk about that, you have to, by the end of the month, check out if you surpass the limit of 35 and you said yes. So you check which are my gains and combine all your gains and collect 15% of the revenue taxes. By the other hand, if you are in the international scenario nowadays, you have to keep track of all your sales and all your alienation operations to check out which are your gains and your losses. Why is that? Because now in this new rule, you have to pay only in the end of the year. You don't have to pay monthly, because you check the overall. You check if you have gains or losses in offsetting. This is new for Brazilian taxpayers, the possibility to offset your losses from crypto to your gains. So you have a different game. You don't have an exemption limit of 35%, but you have a more structural thing that you are able to offset your losses. And there is also another thing. The tax rate on the international operation now, it's only 15%. When I say only, I'm not saying it's a good number to pay. It's what I'm saying here, highlighting is in the national operation, you have 15%, just up to a ceiling of 5 million reais of gains. And above that, you have increasingly higher rates. And here in the international operation, you have only the taxation rate of 15. So it's a different game now, and you have to have a big control of your operations, because the ability to offset the losses you had, it comes along with a very accurate track record of your operation, which we all know that's a very big issue for many of investors of crypto scenario, because there are different exchanges, different reports, and I think one of the biggest quests of the investors is to combine all those reports and exchanges to find the value of the tax.
Yeah, it's a holy grail, right? Whoever can
It's a
figure out how to
holy
do
grail.
this easily.
I think for lawyers, the first thing is to understand the technology and the product. And some lawyers are there at this point, and they are learning about the crypto, what's a Bitcoin, what's a blockchain, what's different of it's a payment token, utility token. But once you pass through this wall, there's a greater wall, which is to find the real amount of the investor in the operations of barter, for example, because when the investor open an international account, it's very easy to swap a crypto to another. So they keep clicking and changing Bitcoin to Ethereum to Infinity to many things. And it lasts for us to calculate all those things, because each of those operations are considered by the IRS, and they don't have this in mind when they do many and many swaps on a day. We're not talking about here with operation with bots that make it even difficult.
Yeah, no, I've always been of the opinion that one of the reasons that Bitcoin has, for all intents and purposes, has ceased becoming a method of payment and has become more of a store of value is just because of the tax treatment. Where it's like every time you buy a coffee with Bitcoin, that incurs a taxable event, which is just like a crazy amount of bureaucracy and work that no rational person would want to do. And then so I've always been of the opinion that if the tax treatment issue had been clarified, even if there's like a small transactions exemption or something that had been widely adopted in the early years, Bitcoin and other cryptos might have gotten more traction as like a payment method. But anyway, that's a whole nother conversation and debate. So we can have that some other time, I suppose. But so going back to where you're about to make a point, and then I cut you off because I wanted to just reemphasize a few things from your initial point. But you're mentioning that there's in addition to the 15% tax, the government has basically given investors a couple of extra requirements as well in this new guidance, this new normative instruction.
Yeah, there's a point that is still mysterious, because we are not talking about every and single transaction with crypto abroad, because the main issue in the beginning of the days were what is a crypto asset. But we surpassed this question, and now is where is my crypto assets? So in the new rule, it was funny, because I had a conference call on the morning last Wednesday, March 30th, and I had another one after lunch at 13 p.m. 1 p.m. Sorry, and in this meanwhile, it came the normative 2180 from IRS saying ruling where are my cryptos and which one are consider a foreign application, a financial application abroad. So only for those who had these requirements, we will apply the new rule. But the question is that the Article 9 of this rule 2180 in the new normative, you have a problem to locate which crypto assets are embraced by this new rule. The Article 9 of this normative, it brings a paragraph 1 and 2 considering the crypto assets. And from those paragraphs, we may deduct that when a transaction is realized with an intermediary from abroad, or the crypto asset is custodian by a foreign company, we may say that the operation is abroad. But it's not all, because only the crypto assets, the virtual assets that are a representation of financiary application, are concerned to the new rule. So we will dive into the discussion of what is a virtual asset that mimetize a financial application. So if I have a token and I make that it is attached to the tax rate of another financial application abroad, I am sure that this crypto asset is inside the new rule. But when you have another token that it's only collateralized in foreign investments, we'll have to check out token by token to see which one of them are embraced by the new rule. And then the new normative also say that the yields that you receive for a foreign wallet are considered also a financial application dividend. So what I'm trying to say here, it's not every Bitcoin or token you have abroad. The thing that it's transaction in a foreign exchange only by itself doesn't attract the new rule. We'll have to see if this virtual asset is resembling a foreign application. So it's a major thing to dive in, and we think that the IRS should clarify this point in the next few months.
Yeah, that sounds very well, I suppose that's good for crypto tax attorneys, because I suppose that means more people calling you for help, right?
We are always making things complicated, but actually, we're trying to clarify something that give me it came very squared here from the IRS.
Yeah, it seems like this seems like, from the way you're describing it, sounds like this is going to create more maybe confusion than clarification at the end of the day. If you have to do a kind of a line by line item assessment of every token, does this fit, does this meet the requirements or not, that seems very cumbersome, I guess we could say. I
think the intention of the legislator was to catch the dividends when you have a staking operation abroad. So this kind of crypto that derives from a staking operation, they will be in the new rule, because there are some kind of dividends of operation you made abroad. So these ones are for sure inside the new rule, but there are many cryptos that stay in between.
What would be an example of a crypto that would not, that at least as you're interpreting the rule, like what would be an example of a crypto that does not meet the requirements?
I would say that if I have a Bitcoin in a foreign exchange, I don't know for sure that it's inside or outside this new rule. Because if I have 32 Ethers locked in a foreign exchange to make staking, I know that the Ethers that I receive from the staking should be in the new rule. But if I have a BTC on the foreign exchange, I don't know for sure if it is in the new rule, because it's not a financial application. BTC itself, it's not a financial application, but nowadays you have many others that replicate index from stock markets or other assets. And those ones, I think it's more resembled to be a financial application. So the most famous example should be the Bitcoin itself. I don't know for sure if it is inside or outside this new rule, because it's not. For me, to say that Bitcoin is inside is telling that it's a financial application to have a Bitcoin. And what do you think about that? Do you know that? Do you think that we should say that having Bitcoin abroad is to have a financial application? I don't know, but I
Well,
don't think
that's
so.
well. If this, I mean, I don't want to sound like like negative or cynical here, but what good is this guidance if it doesn't even answer that basic? If you don't even know if a Bitcoin overseas that's in an exchange overseas within meets the like it falls into this rule or not, like if like that seems like a very big problem. I guess a very
Yes.
like badly designed rule, basically.
Yeah.
If like the main application main thing people are going to want to buy, they don't know if this is actually, or what if I own ETH but I'm just not staking it? Like I'm just holding it. I have 32 ETH I'm just holding, but I'm not staking. I'm not earning any yield on it.
It's
Like with
the
that,
same. For my perspective, and I'm saying this in advance, it should not be applied any rule, because if I only have 32 Ethers, but I'm not having a staking operation, I'm not having a financial application abroad. Because here in Brazil, the IRS used to treat the crypto asset as how can I say, it's immaterial property. So I have a virtual property or immaterial property of a good, and it's not an application. No, it's not a financiary application itself. It's not. It's an asset, but it's not a financiary application. I think for sure that we might say by now, with a certain level of security, that all the gains that you came from staking operation, there are in the new rule. But for many other assets, all the gains you have on those tokens that are indexed to financial application also are in the new rule. But by all the other stuff, BTC, Ethereum, and all the others, we are not so sure that this apply on the new rule.
that's super interesting. Well, because the majority of these operations of the trades that people make are going to be, especially now, are going to be, it's meme coin mania right now. So are you going to tell me that like Dogecoin is also like a financiary, like all these meme coins, these are designed to be just like jokes, right? There's no financial anything, right? They're just jokes. And so does this mean that like if I made 150x returns on whatever meme coin I'm investing in, like I have a legitimate chance to say here that, hey, this does not fall, these gains do not fall under the tax treatment given the current rules?
No, there's a difference here. When I'm saying that it doesn't apply the new rule, it means that you should apply the old rule of taxation.
Oh,
Because
okay, yeah, okay. Makes sense.
okay,
Yeah.
so if you are, let's remember that all the gains I receive till 2023 by selling crypto, all my gains were taxable, even if the operation occurred here in Brazil or abroad. So the tax rates run from 15%. So if I make 10,000 on meme coins or Dogecoin, Shiba, or something like that, that operation should be taxed in Brazil. But if I let's check out a difference here. If we are saying that Dogecoin is not a financial application abroad, and I sell only 30,000 Dogecoin, 30,000 reais in Dogecoin this month, the question is, if it's not a financial application, this should be tax exempt free. Why? Because I didn't sell up to 35,000 reais. So there's a big thing to classify, to identify if those tokens are a financial application abroad or not. Because if I make a plan to sell only 35,000 reais each month, and it's an operation that's considered done in Brazil because it's not a financial application, so I might take all my gains exempt. Otherwise, if I consider this a financial application abroad, should be all taxable, because there is no limit of exemption for a financial application sold abroad. So
Got it.
it's a big difference to tax planning now to know exactly this definition of virtual assets that are implied in on the new rule.
Yeah, yeah. So obviously, I guess there's not necessarily like which scenario is better or worse. It's really going to depend on the profile of the person who's making the trade, right? So if you're a whale investor, if you're a whale trader, it's going to make a lot more sense to be trading outside of the country and incurring the 15%. Whereas if you're doing that same trade in Brazil, you'd be getting hit with 22. But if you're
Yes.
a retail trader, or even just like a swing trader who's maybe not, doing millions of reais worth of volume, but you're still triggering that 35,000, you're going to get hit. Like you're going to get. I mean, it's going to make more sense for you to do your trading on a local exchange, right? So you're not. So you're. Is that? Am I understanding that correctly?
Yes, you're saying very, very correctly, because depending on the volume of your gains and of your assets, should be more advantage to trade this off Brazil abroad, because you have a flat rate of 15%. But if you are daily trader that which only trades till 35,000 reais, it's much better to have those assets here in Brazil. We think that the IRS should clarify this in the next few months, because it's already very tricky to get to the real value of taxable amount. And we don't need this kind of difficulty to make it further difficulter.
Well, so can I ask you one thing? I mean, in your vision or your opinion, what's the motivation for this change? Because I'm having a hard time trying to wrap my head around like why. So basically, like the way I understand it, the whale traders in the Brazil market were already using overseas exchanges anyways, right? So those are the guys who are doing the big volumes, and those are the guys that you would presumably want to recoup the most money from. And then so it's like, why would you want to change why wouldn't you just want to if your goal is like, okay, I see all these whale traders trading on Binance and we're not getting our fair share from these guys. Why wouldn't you just ramp up your compliance efforts and your surveillance, which it seems like they have been doing? We can talk. I have a question about that late for you as well. But like, why wouldn't you just ramp up those efforts instead of giving them, hey, Mr. Rich Guy Whale Trader, we're actually going to give you a 7% tax break for what you're doing. We're going to drop your rate from 22 to 15, but for like the retail guys, like we're going to basically make you, we're going to make it unprofitable for you to like trade on Binance basically because you have to pay all these taxes.
I'll give you a very good view what motivate the legislator and what's the backstage of this rule. The thing is, here in Brazil, those families which had the big fortunes invested abroad didn't pay any taxes at all. Why is that? We're not talking about crypto, okay? Just to understand the landscape of this legislation. We had some criteria that said that if I had 10 million invested abroad, I should only submit my gains to Brazilian taxes when I bring this money back to Brazil. So this raised a very intriguing question, saying, well, families send their money abroad and never bring them back. They spend outside Brazil and no taxes are collected. How can we fix this problem? We'll make a new rule that says that annually, no matter if you brought your money back or not, we'll see which were your gains and we'll tax it. So they are doing this to usual application. If I had my money in a Swiss bank and I start with $1 million and now I have $1.2 million, just those $200 were not taxed at all by the Brazilian government. And by the new rule, the end of each year, they will grab a bite of these remnants. Okay, so when they were putting all together to catch all those fortunes that are applied offside Brazil, someone came up with the idea: what about crypto? People are saying that gain lots of money, the volume increasingly, the volume of transactions only declared to the IRS, Brazilian IRS, last year was 200 billion in trades, the amount declared. So we have a very ramp up industry now. And how about to put in our new rule something about crypto? So this rule it's not made to catch the crypto guys. They're there because they were making a new landscape of rules for investment abroad, and they simply insert something inside the rule. And the proof of that is that the wallets, the virtual wallets, were included in the law that passed last year, uh, among many other things that doesn't resemble the same. So we had this issue that was a little bit clarified by the rule of the IRS, because here in Brazil we have the law at first place, and after the IRS will simplify, let's say, the law, or says make the regulation of the law and see the details and so on. And in this landscape, the rule that came out last week, it brought the virtual assets to say where they are, when they are considered located abroad, but they make still a gap to identify which ones should be in the new rule. So the big picture is the country was trying to grab a portion of the dividends that are made abroad in usual and traditional applications, and the crypto was just dragged on the same rule.
Got it. So somewhere in the process had the idea of like, hey, these crypto guys are making all this money, and let's throw them into the mix as well. And then it gets passed, and then they throw it to the Receita Federal. They're here. You guys figure out how to get this money from these people.
Yeah, trust me. Most of the legislators, if you came out at the Congress and say the difference between whales investors, they don't know what a whale is. So we don't have this level of accuracy of the Congress. Of course, we have some members that are very well informed of the crypto scenario, because we have here in Brazil an environment very favorable, because we have a central bank that we joke that is crypto friendly, CVM also, that our SEC. So we have very good players inside the government, but most of them are not concerned about the difference of whales or something like that. The crypto was just dragged on the new rule.
Got it. And then, so regarding, I know there's some other guidance that was issued as well on crypto tax reporting that is not specific to this offshore law, but it's just more kind of general reporting guidance that was issued as well. So I think people have to report now. They have to classify the types of assets like Bitcoin, altcoin, or a stable coin. They have to report the custodian or the intermediary that's holding the asset. Can you explain that a little bit? What's the new requirements there? What are the big changes?
Yes, of course. We are by the time of filing of our tax report annually, but there's a major confusion in the market because the taxation of the foreign application had changed, as we discussed till now. But for this tax reform, we are dealing only with the operation that took place on 2023. Okay, so there is no changes for this tax form that people are applying and submitting to the IRS. But there are some major changes on this new form, that is the identification of the custodian. Because then we had a box to fulfill and just write where my crypto are custodian. So I should write in the box. And now I have a specific form that requests the identification of the custodian. And you might say, Thiago, I already had to inform my custodian. What's the difference? Well, if you work with a spreadsheet, you see that there is a difference. Why? Because when you inform the real identification in a box, it makes very easier to the IRS to cross-check data. So they might cross-check.
This identification is the CNPJ, right? It's so it's the actual like
Yes.
identification number, the number that the business
Yes.
is used to register with in Brazil. Okay.
So you have a box, and in another opportunity I will show you, and you have to put the CNPJ. So it makes it very easier to cross-check the information, because many investors in Brazil are thinking that crypto is a hidden investment or something like that. They don't have to pay taxes, and there's also people that say tax is robbery, and I will not deal with that. But the question is, if you have your crypto assets in a national exchange and they are reporting your position, so when they cross-check this information, they will see that they are informing you have 10 bitcoins and you are farming 0. So where's the thing? You should be noticed by sometime by the IRS to cross-check this.
But if you're self-custodying, like say if you have your coins on a Ledger wallet or something, or a self-hosted wallet, like what would you put in that box then if you're not using a custodian?
No, that box, it's only open if you have a custodian. If you don't have,
okay.
you click that you have a sub-custodian and you identify your ledger. So it's another thing. We can see that the IRS making this first cross-check information, because at the last month, she reported that 25,000 people had crypto assets and didn't declare. And people were asking me all the time, Thiago, IRS is using AI to identify. I'm saying, come down, guys. It's not the AI that is identified. It's many people have, and I have some people asking me this. I have 2 Ethers or Bitcoins at Mercado Bitcoin, and then I never declared. So it's a simple thing to do. I would get a spreadsheet of Mercado Bitcoin, get the CPFs, the identification of the person, and cross-check with my declaration information. So we see that they are evolving this kind of collection. And there's another major change, is that they are classifying now, previously, the kind of stable coin or altcoins. Why is that? What's the difference if I say only that I have a stable coin and I don't identify if a USD or a stable coin Kobe or something like that? The difference is the cross-check information, because they are getting more accurate data when you fulfill the form with a specific designation of your stable coin or your altcoin in from now on. So what we are seeing here is they're really mapping the transactions to cross-check information with the companies.
Interesting. Yeah, and well, I remember I was going to ask you this question actually about the 25,000 people that they had found that didn't report properly, and I thought they did a good job playing up. They made it the headline sound like really scary, of like, oh, we're using AI to track these people, and like, you know, it's like, oh, we're going to go type into ChatGPT, like, show me all the people that didn't declare their Bitcoins or whatever.
WhatsApp got crazy that day. AI, what's going on? I never declared it. It was a pretty busy day.
But I mean, but in your estimation, are those people, are those 25,000 people like people that were using like a Mercado Bitcoin or a domestically registered exchange, or are those people that were using? I mean, a lot of people are trying to, like, you know, I don't want to say like evade taxes, but like, you know, they're like using the overseas exchanges because the overseas exchanges aren't required to report to the Receita Federal, right? So like, does the Receita Federal have a way of cross-checking with like these exchanges to see, okay, how many, like, how many people actually have, I mean, how are they, like, what's the extent to which like they're surveilling these people, I guess, is these transactions?
This question is made by every single client I have because they want to know what the size of the IRS in practical way, because they are making headlines of AI, and they have a very good knowledge of blockchain. But I'm telling you my opinion on that is that nowadays only the cross-check information they have is the with local exchanges. And by the conversation I have in the ecosystem, I think many people uh, have the crypto assets in local exchange and don't report this because they don't know how. They think they should not pay taxes or something like that. I don't think that nowadays. I know that the government are working to join forces with other countries to exchange information about the foreign exchanges, but I believe that we are not at that point yet. I don't think that among those 25,000 people have cross-check information with foreign exchanges because they are not obliged to get or to give any information to the Brazilian authority. They don't have this kind of obligation. In the new rule, they say that they might be obliged to deliver information of the customers, but I don't think it's a reality. If you are making your operation only on foreign exchange, I don't know if the IRS has this kind of information. But one thing's for sure, sometimes people to get to the foreign exchange, they pass through a Brazilian one. So I see many people that buy a stable coin here in Brazil and send abroad and start trading outside Brazil. But you left one point behind because by the time you bought here and you send outside, although the IRS they know which trades you have done outside, they know you have sent some money outside. So it's a point
Yeah.
because by sometimes they come to you and ask for your records or something like that. Because let's remember that the IRS cannot knock on Binance's door and ask for information, but they can knock at your door and ask for information. So if you bought in a Brazilian exchange $1 million in stable coin and sent abroad, they know you did that. So you
They might
might
not know.
be.
They might not be able to tell exactly what you did with that 1 million, those 1 million tethers, but they know that you sent them, and that you're using it for something, right? You're not just putting it there for no reason, right?
Yes, and most of those people get the Satoshi boat and the cruises outside, and they say, "Oh, if I say that I lost my ledger, if I lost the bitcoins, I lost the password," and this comes out very often when you're talking about Bitcoin. But the thing is, at some point of time, you will want to buy something. So we receive people that make large amount of money or trades, and at some point they want to buy a house here, and they have no income. So I have no income at all, and I want to buy a million reais apartment here at São Paulo. So how can I declare this? I don't have money. The IRS never knew I had some money. So you start to have problems to make it tangible. Most people say, no, but I'll not buy, I'll live outside the system. The thing is, in most cases, at some point, you have to make it right because when you want to buy an expensive car or a house and you have no income declared, it's impossible to justify this movement. So you
Yeah.
it's just not correct thing to do.
Yeah. I think that's where I think a lot of people are going to have a slip up, right? Or like they're gonna encounter problems one way or another. But for sounds like from what you're saying though is that even though the Receita Federal, the IRS has been the last couple of years, they've been kind of going around making statements trying to spook people into say like we can track you, like we can find. You're saying that you don't think they necessarily have the ability to go to Binance and be like, hey, send us all this information, but they have said things. I know even like last year around this time, there was one of the IRS guys who was saying, came out publicly, had some kind of press conference, and he was saying something like, hey, look, guys, like we have like a 7-year, or I don't know how long, remember how long it was. We have like 7-year statute of limitations on this. Like we don't, just because you get away with it this year doesn't mean we're not going to find out 7 years from now, and we have ways of like tracking this stuff. So what you're saying is like at this point in time, it's unlikely that they've got like Chainalysis or somebody under contract who's tracking all of these movements on your Uniswap and all of your MetaMask wallets and all these things, seeing what airdrops you're farming. But like it's not inconceivable that could be happening soon. Basically, is that
Yes,
fair?
I think they are making. There is no doubt that they are making good efforts to achieve this kind of checking and cross-checking information. But nowadays, I think there are many operations that are in front of them. They didn't make the tax assessment yet. We have thousands of people in a very delicate situation that have crypto and didn't inform. Of course, if you have a foreign operation that is dealing with a criminal investigation or something very big and outside of the regular thing, I think they are moving their efforts quicker. But I don't think that for the regular investor is the time that the IRS are investing or their time to take in, because it's much difficulter. It's much difficult to check this information, and they have many easier information to grab and to cross-check inside.
Yeah, that makes sense. And then two quick questions here before I let you go. I know we're almost at time here, but I just want two quick things. So for those people, those 25,000 people that were identified as not reporting, like what happens to those? What are the consequences of this? Is it simply like you might just get a knock on your door saying like, hey, you got to pay, or is there other like kind of criminal, sort of implications here?
That's a major difference between Brazilian and American law. Here in Brazil, when we talk about tax evasion or something like that, in the general rule, you should be asked only to pay your taxes. Of course, I'm not talking about criminal activities and things that are outside, but if you are only not paying your taxes, there is no such criminal assessment to you. So it's not as rigid as it is in America, for example. They are, most people ask me, Thiago, I never pay the IRS. Should I worry? Could federal police appear on my home and I get arrested all the way, as we see at the movies or some operations? And I always say that if you are only not paying your taxes, that's the only thing you didn't do, you should not be worried about that, because they will ask you information and they will force you to pay. And by force you, I don't mean to say that you got be arrested, because it's not allowed in Brazil to arrest you because you're not paying taxes. It's a major difference between our system and your system as American. So and there is another thing too. We are in the early stage of taxes in crypto. And what I mean about this is the information of the IRS sent last month says that they are considering to make a auto regulation program. what is an auto-regulation program? It means that without the juridic terms, that the IRS should say to you that you are not paying your taxes, but it's a short notice. It's a notice before a process, a due process. So you have the chance to receive a letter, let's say, and spend 30 days to calculate and pay your taxes without fine. It's a major thing. If it is applied, they are giving a chance because we are talking about a large amount of people that don't know how to calculate these things. Most of contabilists or lawyers itself, you know that we are on the same event all through the years, and there are only 10 or 20 or 30 lawyers to discuss this. Or in the accountant service, it's the same thing. You don't have a really large amount of professionals who knows how to calculate, how to check out a report, or what's at stake in operation. So the IRS always sees this as a point that they cannot punish every single person that didn't collect their taxes. So they are considering to have an auto-regulation program. It's very, very good for the taxpayer because they might have the chance to collect in 30 days without a penalty. It's amazing.
Yeah, yeah, yeah. That seems like that would definitely to be a win-win if they could pull that off, right? And then so I guess just last question. I want to get some final thoughts from you on just we've talked about a lot of stuff here today, and I think there's a lot of stuff to process. And there's I think there's probably a lot of new information for people that might be listening to this, or because I think it seems on these questions of taxes, there's just like lots of I don't want to say like incorrect, like misinformation, people like deliberately spreading like incorrect information, but this is just complicated stuff, and it's not something that gets communicated really easily in like Instagram posts or something, right? So like I feel like there's a lot of misconceptions, and I would just like to get your thoughts on, okay, like what are kind of the next steps here as far as getting people just creating like a broader understanding of what's changed here.
Okay, let's try to resume all the information in 1 or 2 minutes. We have a Brazilian scenario that's very, very good for investors because our tax rate is always 15%. What changed between the old rule applied to 2023 to now is if you having operations abroad and this crypto is a financial application, you might consider to make a tax planning because you are able to use your losses and you will have to check your your trading records through all your year. So you have to be more organized to make sure you're not paying more taxes that you should. For those who are trading only in Brazilian exchanges, you don't have to worry because nothing changed at all for you. You still have a 35,000 reais limit on tax gains, and you have to pay by the month after your trades, your capital gains at a regular rate of 15% for most of you guys that have gains up to 5 million reais. So I think for the coming soon new regulations to see what's a financial application abroad that should take your staking operation and your crypto that mimifies application abroad. So to make things more clearly, if you have a staking operation abroad, start to tracking this on your spreadsheet because by the end of the year, you need this information to see which amount of taxes should you pay.
Got it. And then the question of if you have your coins just physically, if you're self-custodying, but say your Ledger wallet is in a safe in Switzerland somewhere, like, and then you go to Switzerland and then you make a trade, you sell some coins from your wallet, that would be considered an overseas operation. Well, assuming that Or if you say you have ether staked on your ledger wallet in a safe in Switzerland, you fly to Switzerland and you unstake those ETH, then that would be considered like probably like an overseas trade. That presumably that would be under the over this new rule, correct?
That's a very tricky question because it's not on the regulation, but if you can prove that your wallet is stored abroad, I think it might have a chance to consider this financial application operation that occur abroad. But but people cannot misunderstand that make an operation here with a ledger and say that the operation took place abroad. It should not be possible. So if you have an airplane ticket, show that you are 2 months taking vacation on Switzerland, and you make a transaction in this period that you were there, you might applicate the new rule. But you may not say that, no, I make an operation with my ledger, but my ledger is in New Zealand. The thing should be proved. So as long as nothing's proved, if you have an operation with a hard wallet, they should be considered as a local operation, the operation that took place in Brazil.
Got it. So unless you have like definitive proof, otherwise you should consider these self custody wallets, or even if you're like if it's like a MetaMask on your browser, and I'm in the U.S. when I like make the transaction from the MetaMask on my browser, but if I can prove that I'm in the U.S. during that time when I made the transaction, then it could be considered a foreign. Anyway, okay. I mean, we could talk about this all.
I think it's the same thing of saying that I have $10,000 with me, and to say that I sold those dollars in America, I should prove that I was in America.
Right.
I should not say no. The main difference is that all crypto transactions are made through the blockchain, so I can do it anywhere. But if you bring to this example, it's the same thing. I should prove things, and by the in the regular state, if you have a transaction with a hard wallet, they should be considered as a local operation and not abroad.
Got it. Well, Thiago, really appreciate your time today. I feel like I'm leaving this conversation with more questions than answers, unfortunately. But I guess maybe that's. It seems like there's a lot of things to be like resolved here, but and this guidance has created maybe a bit more confusion than clarity, unfortunately, on some matters. But we'll definitely be like tracking this in the coming months, and hopefully there's some more clarity around this that emerges here, and the market can react accordingly. But I really appreciate you taking the time to share your expertise and your experiences here. This has been super helpful. I'll give you the last word here, and then any final thoughts, and then how can folks get in touch if they have more questions?
Aaron, it was a pleasure to chat with you about all those complicated things. Things are new and hot here in Brazil in crypto scenario. I hope I gave a message of which are the difference between the old regulation and the new one. There are still some steps to take, and we will show those steps together with the IRS. Thank you very much for the invitation. It was really a pleasure. And anytime you want to chat about taxation of crypto in Brazil, I'm always ready to chat with you. Thank you very much.
Amazing. And then I'll include a link to your LinkedIn profile in the show notes here if folks want to ping if they have more inquiries. But really appreciate your time, Chiago, and thanks everyone for listening, and we'll see you next time.
Bye.